All right, good evening, everyone. Tim Davis coming to you guys with another weekly market review. This one I'm going to strictly focus on some of the longer term charts, especially the monthly chart to show you guys what is transpiring. And again, it's like I said before, if you pay attention to the monthly charts, you can pretty much block out all the noise and see what the overall market sentiment or market direction is showing us. So this first chart I'm going to be looking at is a look at the SPXA 200R, which is what tracks the overall amount of stocks that are trading above their 200-day moving average as it relates to the S&P 500. And what I'll point out here is you'll see these diagonal lines I have drawn here. This is the direction of the market during those time frames when we started to see overall pullbacks in the market. This is the overall direction of the sentiment. The sentiment was showing us. And as we look at what's happening now, we had a shift in sentiment starting beginning of May of 2021. And as you can see, the overall sentiment shifted lower. We got to as low as about 10% of stocks trading below the 200-day moving average. Then we got a big bounce, and that was around October 2022. We got that bounce. But we kind of like topped out, got right back up around about the 70, hit a high of about the 78% percentile of stocks trading above the 20-day moving average. Then we started to reverse in a big way, breaking below previous levels of what used to be support. Now it's becoming resistance. So again, this is the tool that tracks the percentage of stocks that are trading above the 200-day moving average. And as of the close of business on Friday, we only had, see this little circle that, we had 37. About 37% of S&P 500 companies trading above their 200-day moving average. 0.37, meaning there's about 63% of stocks that are trading below their 200-day moving average, which is clearly a bearish signal. With this tool, if you get below this 50% level, that's normally a clear bearish signal. As we're trending upward, a nice break above that level is definitely considered around a pretty good, decent bullish activity. But now, and as you can see, we quickly reversed. Now the bears are back in control of this market. So overall sentiment is shifting to a complete bearish negative. And if we look further down, you'll see some of the crossover or some of the oscillators that are also agreeing with what's happening within the candlesticks. Here is the full stochastics. We see this green line that's crossing below that red line. That is a bearish signal, which is also some people use as a sell signal. Whereas percentage heading lower is below the halfway point between the overbought conditions and oversold conditions. We are dropping below the halfway point, and that is also a bearish signal. And right now, look at the CCI. We have what's about to be a bearish crossover, meaning that the overall sentiment is definitely heading lower, according to the CCI, as well as we are trending. The oscillators are starting to trend lower as well. So with that said, folks, overall sentiment, this tool is showing us that the overall sentiment is definitely turning negative again. So that rally that we're seeing within this bear market is pretty much done. It's done for now. That was the rally from October up until now, and it's like we are starting to reverse that narrative. So that's what the monthly chart of SPXA 200R looks like. Here's a weekly chart of this tool. Definitely in a downward trending spiral. Now let's switch over to the S&P. Now, a couple of things I want to point out on the S&P. Let's switch to first of all, a S&P monthly chart, I want to point out a couple things, which is why I really like to pay close attention to the longer term charts when I start to see some type of change. I want to highlight a couple things here before I even look at price action. Look at what's happening in the Williams percentage. Look at the oscillator. It's starting to turn and go back lower already. Even though we briefly hit oversold territory, got a little rise, did not go back overboard, like we're ready to curl and go lower in the Williams percentage. Same thing like it's about to happen in the CCI. It's starting to, the positive line is starting to curl lower, and it's about to make a cross back below this yellow line, which is completely bearish. So what is price action showing us? Well, here's what price action is showing us, is that there is a defined level of support right around here. It's right around 35,000 or 34,770. So there's a defined level of support right around that level, which is almost, this is just above the level of the highs we saw in 2020. If we continue to go down this path, folks, and break this level, we're going to see a major shift in direction, and it's really going to start to accelerate to the downside. If we look at the top of this range, you can see where there's a well-defined level of resistance. So this is the range that we've been in since October. We've been in this range. This level breaks to the downside, we should start seeing some major pullback. Already saying major pullback, man, there's nothing compared to what we could be in store for. So as we start to trend lower, again, here is the channel that we're in now. If we break below this level on the S&P, which is below that 35,000 level, we should start to see a pickup to the downside, and we'd be heading towards the highs of 2020. That's the S&P. Let's take a look at the Dow Jones. Dow Jones, same type of scenario. Look at the weekly chart. We definitely ran into some resistance up here, and the market has just not been able to break above this level of resistance. That's level of resistance. Market has been unable to break above that level. So what happens as price runs into this level, we start to bounce off of the level, then start to show a definite trend lower from that level. We even broke this level. So now we are in a new downward trending channel. On higher volume too, should I add, on higher volume, trending down on higher volume. That's what the weekly chart is showing us. If we even take a look at the daily chart, you'll see higher volume on the way down. So we could easily see a little bounce here, but I think the bears are definitely has a fingerprint on this market. Any rally will probably be short-lived as we continue this downward trending channel. Here's our monthly on the Dow, which is definitely confirming that we are in a new downward trend. And again, pay close attention to the full stochastic oscillators, which shows what most people will call a sell signal. The CCI is even closer to crossing with a sell signal, and the Williams percentage oscillators are pointing down as well. So it looks like we are definitely starting to see the next channel down. The one thing I'll point out about the Dow, this Dow is that here's the highs of 2020. Let's have 2020. Here is your October lows right here. And this is where we are now in this downward trending channel. We are not far, folks, from breaking below the October lows and heading into the channel that we were in 2020. We could start to see some huge moves to the downside, folks. And all the other time frames are starting to fall in line. Here's our daily, I'm sorry, 4-hour chart. Look at this downward trending channel that we're in. So any rally that we see in the near term could quickly be met with some resistance, and we'll continue to break down. On the Dow, the next level I'm looking for, folks, is actually 30,000. If we get below 30,000 in the Dow, we should start to see some sharp selling to the downside. And if we hit below that 30,000 level, we're going to be in this channel that we saw in 2020. That is the Dow Jones. I think we already did the S&P. I think that's the first one we did. So we already did the S&P. All right, let's look at the NASDAQ now. The NASDAQ is trying to defy odds, but it's about to meet the same fate. So here's the NASDAQ monthly chart. And as you can see, what appears to be the NASDAQ on a monthly trying to turn and go higher. But I want to tell folks to don't get so quick ahead of the gun, because it too is on track to possibly run into some major levels of resistance. Let me get rid of this. That's going to be a strong level of resistance, folks. And if we look at the past two candles of the past month, pretty much indecision. Get rid of this. These candles here. They're not solid candles. We've pretty much been up to this level, been struggling to get above it, not solid candles, indecision. And it looks like the Williams percentage may be about to curl over. Like it's still pointing up, but like maybe about to curl over. Look at the CCI. It's already starting to bend lower. So I think by the time the market ends next week, we could probably start to see by the end of the trading day on next Friday. Remember, there's Fed speak on Tuesday and Wednesday, I believe. By the end of the week next week, we can start to see downward pressure in a major way on the NASDAQ as well. Here's a weekly chart of the NASDAQ. Again, you see the ceiling that we keep bumping his head up into. Looks like that's going to be a strong level of resistance. And then below that, we see some support right around 10,232. If you drop below 10,232 on the NASDAQ, we'll start to see some acceleration to the downside. That's the NASDAQ. Let's go straight to a Russell. And the Russell is definitely just been giving up the ghost. Here is a level of resistance right around 2040. We're nowhere near that now on the Russell. We are heading in the process of about to break levels of support. Right around 1647, 1660, I should say. We break below this level, we are definitely going to start to see some acceleration to the downside on the Russell. Look at a monthly chart on Russell. You see that tight channel that we're in? And it sort of kind of reminds me of the setup that's happening right now in the NASDAQ. See, before we had this red bar on the TTM squeeze, it was yellow just like the NASDAQ is, and you saw price action curling to go higher. Look what happened to the Russell. We quickly got met at a level of resistance and pulled right back with a strong red candle that's showing. Not only did we pull right back to that level, and this is almost exactly to the October lows. Look at the hinges in the full stochastics oscillators, Ram's percentage, and the CCI, all making a drastic turn downward. And look where this will take us. And we're already at meeting the highs of 2020. Highs of 2020 right here, which is around 1731. Highs 2020 around say around 17. Let's say 1720, 1721. Look where we close at today, folks. 1725. We break much further below 1725, folks. The Russell is going to be the first one to be lower than the highs of 2020, and it's going to be in this range. So watch out for that. Russell's going to be one I'm watching first next week. If we break below 1720, then Russell will probably start his acceleration to the downside, and all the other indices will eventually follow. That's what the Russell looks like. And if we look at a daily chart of the Russell, you'll see it's like a bear flag here. We're just hanging here right now, hanging above this level of support. We could see a little rally, possible. Anything is possible, but I think anything is going to be short-lived. And like I said, bears have their teeth in this market, folks. Any rallies are going to be really sold probably quickly. That is the Russell. Now, draw your attention to the VIX, because the VIX is showing something amazing. It's showing major breakout potential, folks. Look at this bounce off of this level of support that we've been hanging around for almost a year, and we finally broke out off of that support level. And look what the VIX is doing. It's consolidating after such a big run on last week, over the last week or two. Consolidating, and it's like it's about to take off again. Look at a monthly chart on the VIX. All the signals are definitely flashing trouble for the markets. Pay attention to the VIX, folks. Look at the wins percentage. Got a huge move up on a monthly chart. Oscillators are pointing up in a big way for the VIX. Oscillators in the CCIs is starting to cross with the buy signal. Oscillators in the full stochastic starting to cross with a buy signal. And I'm looking for the VIX to start to really ramp up. If we see the VIX pop above this $29 level, folks, watch out, because we're really going to start to see an acceleration to the upside in the VIX, which means we will see the opposite in the S&P and the bulk of the market as well. All right. So that is what our major indexes look like. That is how it looks like it's related to our VIX. The bulls are really about to get crushed. Pay close attention to the VIX and pay close attention to the tool that tracks the percentage of stocks trading above their 200-day moving average. Now I'm going to draw your attention to the gold chart, because this also showing that in the midst of turmoil and confusion and uncertainty, the VIX, folks, the gold is doing what it normally does. And people are running to gold. Look at this gold monthly chart. Look at this setup. Look at that channel that's starting to form. Oops. This channel is starting to form. Then go a nice upward trending channel. Ultimate breakout be above 2081, or above 2089, should I say? So above 2089, we see, a breakout above 2089. That is going to be a major breakout for gold, folks. A major breakout. I'm already in a couple gold positions because I see the trend has already changed. So I'm not waiting for the breakout. I am in now. If we look at the for stochastics, it's still trending higher, not even in overbought territory yet. On this is the monthly chart. Look at Williams percentage, pointing straight up. CCI starting to curl up as well. T10 squeeze has yet to fire off, with the dark blue bars telling me that this movement is just beginning. Here's a weekly chart of gold. Look how strong the move up is. Look how, and that is that's a solid green candle, folks, on this past week. Look at that. That's the most bullish candle you can get. Little to no shadow on the top or the bottom. Full bull candle. So that leads me to believe next week is probably going to be another strong week for gold. Look at the oscillators and the full stochastics starting to turn back up already. Percentage turning back up. CCI definitely turning up to the upside. Looking out for gold to really break to the upside next week, folks. We could see this stays this strong. We could see gold at 2,100 next week, folks. That is a possibility. So don't sleep on it. All depends on what happens with the Fed on this week. If the Fed doesn't have a way to calm markets, we're going to see gold really accelerate. So if gold is about to accelerate, what do you think is going to happen with silver? It should follow. Here's silver. And as you can see, this is a weekly chart. It's just getting its nice little bounce off of a level of support. It's just starting. And I do have silver positions as well, folks. So there's ways to make money in this market. And I also have some bearish positions against the market. So one more we'll look at the view this week, and that is crude oil. Because crude oil, folks, is doing something that it didn't do since, let me look to a monthly chart on this first. Point out something. See, here's crude oil, folks. And every time crude has started to have these big drawdowns like this, like we've seen, there's been sharp selling pressure to overall markets. We've seen it back here seeing it back here in 2008. And what happened when crude really took a reversal to the downside, the markets followed. And we're seeing it again right around here, 2014. Markets followed. Here again, in 2020, markets followed, and here we are again. Down to a level of support, but let me pull up some shorter term time frames. Let me show you what's happening right now underneath the surface. Clear this. And again, look at the on this monthly chart, we'll see that we're dipping into oversold territory. We could see a temporary bounce, but I think this move to the downside is so strong that we're going to continue to go down, folks. I think oil will continue to go down. So any short-term rally in oil, I think it also will probably sell off, continue to sell off. One reason that lead me to believe that is that we're right. Look at the months. I was right close to an area of oversold territory, and definitely hitting oversold territory on the weekly chart. But look what happened. This has been a strong channel for oil. Since we started to trend downward, oil started to consolidate last year around November. This area has been a strong channel for oil. We would hit support, then bounce it with resistance, then bounce. Then get rejected. And look what's happening. This level of support, folks, has been broken with this strong red candle on last week. So that leads me to believe that now former support will turn into resistance. So with gold, with oil being oversold in the near term, let me switch to a 4-hour chart. Oil being oversold in the near term, could we see a possible bounce? Yes, we could see a possible bounce. But even if we see a possible bounce, look how strong that trend line is right here. if we see a possible bounce in oil, it's going to be rejected, folks, more than likely right around the $70 level. Because as you can see, that $70 level is now acting as a strong level of resistance. Drop below that level, little bounce here, could not get above it, little rally there, little bounce here, and boom. So any rally back up towards that $70 level, it's just going to be a setup for a possible break and to break lower for lower prices, and ultimately head back below 65 and break this next level of support, which will be so that next level of support. If price actually continue to trickle lower, it'll be right around, drop below 65, take us right around 60, 61 or 62 bucks. Folks, if we break 62 bucks, let me show you what that looks like by looking at the bigger picture. So we break below 62 bucks, folks, which is this second trend line here. That's going to put us, set us up for a possible move all the way down to about 42 bucks, folks. Right down here, about 42 bucks. That trend line is where we were at previously in the past. And I told somebody earlier that always try to look to your left to see where price action changed before in the past. And one thing I'll highlight here is a couple of things. Right here in 2019, we got around to this level of 41 bucks. We got a bounce in 2018, 2019. Then we pull right back to this level in 2020. And then what happened? We broke right below that level. So this level, this $40 level, is a strong level of support as of right now. Previous resistance becomes support. Look on, see back in history where we hit this level also, which leads me to believe this is a very strong level of support that could be broken. We hit it here back in 2015, and we also hit that level here, the $40 level here back in 2009. And we know what ultimately happened in 2020. We got as low as $6.75 a barrel. Folks, don't like to scare folks, but we could see a major break of this trend line and retest the lows of 2020. That is a possibility. If you look at the full stochastics, we are definitely in oversold territory on this monthly chart, but that could last, folks. This is a monthly chart time. That could last. We could definitely start to see some more selling pressure. Now, there is a possibility that the oil could find a way to find some support here soon. And that's what the bulls are hoping for, is that oil finds some support at one of these levels. So let's see what happens as we travel, trade throughout these next couple of weeks or so. All right, folks, this is some interesting stuff that's unfolding before us. I mean, we are looking at some history that's forming right before our eyes. And let's just see how this plays out. It could be extremely detrimental for our markets. Let's just see how this plays out. All right, folks, until the next video, Tim Davis is signing off, and I will catch you guys sometime next week.